Without a doubt, Robinhood is one of the fastest-growing online brokers. Robinhood's smartphone app was quite disruptive in nature within the brokerage industry for those who are not familiar, especially with its embrace of free commissions. The online broker did really well during the pandemic, continually expanding its customer base, far outpacing its competitors by a wide margin. However, within the past week, the Securities and Exchange Commission accused the online broker of misleading customers regarding how it acquired and made money. It routinely allowed customers to execute trades so poorly that the customers usually came out worse even when the company's free commission is taken into account. Robinhood opted to settle out of the lawsuit at the cost of $65 million. However, the parent company Robinhood Markets is seeking to go public next year with a valuation that exceeds $10 billion. Not bad if you ask us. $65 million seems to be a drop in the bucket, relatively speaking. Throughout the legal proceedings, Robinhood never admitted nor did it deny any wrongdoings, but it did agree to hire and implement an independent consultant to assess its customer communications with an emphasis on trade execution. The company has even publicly said as much via spokesperson in its pledge for reformation. Quote, "Fully transparent in our communications with customers about our current revenue streams, have significantly improved our best execution processes, and have established relationships with additional market makers to improve execution quality." Circling back to some of the SEC's concerns, the Secretary of the Commonwealth of Massachusetts vocalized the risk the company's model places on its customers. Only a day after the Secretary's vocal announcement, the SEC released its order. The SEC alleges the business model was inadequately explained to its customers over the course of 3 years, 2015 through 2018. The SEC also proclaims the company did not get the best execution on trades. The model in question is the practice of making a majority of its revenue from order flow by taking a cut of the profits that market makers earn by executing clients' trades. Robinhood has since asserted the claims held within the SEC complaint are far within the past. Quote, "The settlement relates to historical practices that do not reflect Robinhood today," Gallagher said in a statement. "We recognize the responsibility that comes with having helped millions of investors make their first investments, and we're committed to continuing to evolve Robinhood as we grow to meet our customers' needs." Well, guys, tell us what you think in the comment section below.